This is terrible, folks. This is absolutely horrible. We are at the end. It's over now for the United States and AI. Clearly, China is way ahead of us. They were just able to recreate essentially ChatGPT overnight for only $6 million. Deepseek has now destroyed all of America's AI potential. Folks, if you are in the category that really believes that, you might want to turn this off right now because I'm going to debunk that issue right away. First of all, when was the last time that we got accurate information from China? And I think most of us who've been watching China for many, many years can tell you it would possibly, quite possibly, has been never. So the idea that they recreated ChatGPT overnight for $6 million is preposterous. Now, yes, can they, as with all new technology that's been out for a while, can they do it cheaper than, say, ChatGPT did it a number of years ago? Of course they can. And that's what China does best. They take the technology that has been created here in the United States and they improve upon it and they make some tweaks and all that. But what they don't tell you is all the R&D that went in before that final testing phase and that final creation phase that probably did maybe cost them around $6 million. But all the testing and all the R&D that went into it before that was not included in that $6 million figure. And frankly, what that is, it's called a large language model. And frankly, that's a commodity at this point. And that was in like the first second of an NFL game for where AI is likely to take us. And we've had it for quite some time. China has somewhat recreated it, although when I kind of looked at it, there were still a few flaws out there. So I really don't think that that reaction that we got the other day with big company names that we all know, again, not investment advice here on our channel at all. Please do your own research or contact us for building your best life using the tool that we call money here at Guardian Rock Wealth. We're happy to help you with that, but this is not what this is about. This video is strictly to say that what we saw just the other day with, say, NVIDIA and Palantir, which we own in our portfolios, and Broadcom, and you name the big tech company down, some of them 17%, one of them that we happen to own, down over 20% in a single day because it was AI related, was just well, I don't have a real good word for it, except it was ridiculous, right? And it created, number one, a great opportunity to pick up some additional shares of great companies that are doing great work that are currently profitable and add to those positions at a reduced price. Some of those prices went back to the prices that they were back in October, or some even further back than that. So it was like being on special. I think that the stock market is the only market in the world that people don't get excited about when they see their favorite things on sale. Now, of course, when you see some things going down in price, there might be a good reason for that. But yesterday or a couple days ago when this happened, that was not the case. These are still the same companies. Guess what? NVIDIA built the chips that China used to create this Deepseek. So I'm not sure why we thought that NVIDIA was in trouble at that point, but it was a great opportunity. It also brings up another very important point to those of you who are long-term investors, and that is that you never fall so in love with a particular company or even industry that you put your entire portfolio and frankly, the tool that builds your life into one or two or even three companies in particular or sectors in particular. That's a really good way, especially if you're drawing closer to retirement when you're going to be drawing down on those assets. It's a great way to destroy your retirement. No matter how much you happen to love, pick the company, NVIDIA, Tesla, Palantir, whatever, they all have risks. Now, I happen to really like some of these companies as well, but I know that I would never put more than a certain percentage, and you should know that percentage for your portfolio. This is the big tip of the day. And again, not investment advice here. This is strictly just good, solid, long-term ideas on how to build your best life using the tool that we call money. Is practice your portion control. You know, we have portion control when we eat, right? We don't eat all the chocolate cake at once, even though some of us, like me, would love to do that. Instead, we take one piece. And so we don't weigh 400 pounds like I would if I just ate chocolate cake as much as I would like to. As much as I would love to own 100% of some of these companies that I believe are changing the world and will likely change the world continuing on into the future, I know that there are always risks that I may not know about. There are risks that nobody knows about, disruptive risks, key person risks, things like that. So be careful with your portion control, but also be careful when you see these news articles and you see these big moves in the stock market. Don't have that knee-jerk fear reaction and just sell all your shares at once, because that can be very painful to your portfolio as well. I hope this has been somewhat helpful for you today. This is John Browning with Guardian Rock Wealth out of West Palm Beach, Florida. We are accepting clients in the wealth management field, and we are accepting them from across the United States. So reach out to us at guardianrockwealth.com or text the word life to 321-421-5213. There's lots of free information out there on our website, even if you don't want to talk to us. We don't sell you anything. We just want to help you, again, build your best life using the tool that we call money. Have a great day, everyone.